What do you make of the recent volatility we've seen in Bitcoin? Is it par for the course for somebody who's been looking at it for longer, or does something feel new about this?
Something feels new, not in terms of the volatility, it's roughly where it has been. It's been choppier, basically since March to May, Bitcoin top first, then Ethereum. They really haven't broken out again. So they've been this big kind of sloppy range that goes up and down a lot. And I've been thinking about that because normally, at this point in the crypto cycle, you'd have seen mass retail participation and this explosive run. I was expecting it, as was many. Hasn't materialized. Why? Now, is there a structural change in the market, or is it because crypto is discretionary spending or discretionary investment? And if you've raised prices on people, they have less money, retail participation, to put into crypto. So maybe that's why the flow. So we've not seen the kind of number of new wallets and all of the other metrics follow when we had the recent high, and it makes me think that people don't have money to put in.
That would be a cause. What if it's a symptom? What if they feel insecure and they see it as a risk asset and they don't
see it as a risk asset because the narrative is like, this is a long-term inflation hedge.
Yeah.
And we'll talk a bit about that because it's not traditional inflation.
Right.
It's actually about central bank debasement. And the central bank debasement is slowing its rate of change because they're tapering, i.e. they're injecting less money each month in. So it's that it reacts to and not to inflation numbers. They're two different things.
Okay.
And in the end, we're talking about inflation that's running at 6-7% a year. Well, Bitcoin's up 100% and Ethereum's up 500%. So it's more than accommodated. But people think it needs to be tick for tick correlated.
Yeah.
It doesn't work that way.
Yeah.
What it is a long-term method for sidestepping the devaluation of fiat currency, along with, more importantly, a call option in the future of technology and Web3 and all of the new things that are being built. I think we're looking at it too short-term time horizon. But maybe it's still this factor of discretionary spending. How much money can you put in? Can you put your $100 a month into your crypto portfolio, or is that now going in your gas tank of your car and on your grocery bill? That's a meaningful difference to people, and the same will affect equity markets. So are the Robin Hood traders able to deploy as much capital into opportunities? The answer is probably not. I think it's actually pretty intelligent how they've used options and caught onto options. Don't forget, this generation of 30-something-year-olds, the millennials, got screwed over by the system. They have massive debts from education. They have no ability to buy property. They have no upside. They've got all-time record valuation in equity markets, real estate markets, bond markets. How are they supposed to make wealth?
Right.
They are risk takers by nature. They learned it in gaming.
That's such an important point.
Yeah, and so they come in a different mentality. Good for them. They will learn the lessons of what's too much they're betting on their options. They've also learned that crowd behavior works as well, and they can corral a community around an idea and participate together. So I just think it's different. And people look at the amount of options trading and go, this is excess speculation. No, this is a whole different group of people who trade in a different way. Much like when the systems funds and algos came into the market and was like, oh God, they're terrible, the world's going to blow up. No, they still exist, they just trade in a different way.
So you don't think the gamification, people say that like it's a dirty word, the gamification of
course they
stock
do,
trading.
because it's supposed to be about your RIA advising you how to invest, and it should be about value investing and cash flows, and how dare they buy bankrupt companies.
Wow.
I'm sorry, but nobody has the right to tell them what they should or shouldn't do.
Yeah.
That's the point of democratization.
Yeah. Raoul, I've been dying to ask in a DB, have your views on the retirement crisis changed, evolved since you made the original video?
Yes, and it's too long for this.
But
one thing is the pension system is less underfunded, but the reality is if you've debased the currency, your actual dollar is worth less in terms of stuff. So it looks less underfunded because assets have gone up, but the reality is the purchasing power of those assets hasn't increased. So I think it's still a huge problem. I think the baby boom generation will diversify out of those assets. What I did not see was the Robin Hood traders. I knew it was coming to crypto, and I said that in the first thing, and this is the big opportunity, and those guys have taken that. I didn't think they were going to use options as another way of participating in the market. So yes, it's changing, but what I'm seeing is the millennials are taking risks in a way that is intelligent for them, because they've got nothing to lose.
Right.
but they've got everything to
Lily
gain.
Frank has brought that up too. Why not go and if you lose, you've already lost. You already have nothing. But if you win, you're up 10x, and it's
I've mentioned this before. Is what really annoys me again is people tutting at these people saying that's not how you do things. These are the same people on Twitter who won't be held accountable for losses.
Right.
Well, on Reddit, these people have got loss porn going on. They're like, God, look how much money I lost today. So they're being honest about what they're doing. They understand the risk, but they're also enjoying it. YOLO is a real thing.
Why would institutions still allocate in crypto in Q1 knowing the Fed's tightening, and what would that do to asset prices? Why wouldn't they just wait on the allocation until the Fed concludes tightening?
There is no correlation necessarily between crypto prices and Fed tightening. So we haven't seen that.
Okay.
And institutions move slowly. So it's taken them 2 years to get the approval to trade. And I've spoken to a number of people here, whether it's Fireblocks or whether it's the guys at Luca, talking about all they're doing is onboarding these people. And it takes them a year to get their investment committee approvals, and then they need to set up their back office infrastructure and do all of this. What they're thinking of is a long-term allocation. They're not traders, these institutions. They're thinking, okay, we want to put 2% of our portfolio in crypto, and we have to start somewhere. And usually they all act like sheep because they start at the beginning of the year. And then they operate quarterly and they rebalance. And that does change the structure of markets. Because if crypto's gone up a lot or gone down, if it's gone up a lot, they'll sell some to reduce the exposure back to where they want it to be, their 2%. But if it's fallen, they'll buy it. So it does dampen volatility over time and change the structure of markets. I think it's a good thing.
What about Mark's comment that there may be, if there's a sort of institutional, because in some ways this is a threat to traditional institutions, do you think they're shorting it, or do you think there's the more institutions get involved, does it change the dynamic at all?
I mean, the point being is, why are we tutting at futures traders for shorting it? It's a free market.
Right.
People should be able to take the view. If we're right,
and it can withstand it, should withstand it if it's a...
Of course it should. If it's a real asset and it's got real value over time and it's going to go exponential over time, then it's just part of the market. So it doesn't really matter. And people can get frustrated in the short term because it's not following what they would like it to do. The market doesn't do what you would like it to do, it does what it does. And you have to adjust accordingly to that. Look, some people are traders, they're short term, they want to buy and sell. I don't think that's the right thing to do in exponential trends. They're volatile by nature, and all you're looking for is, what is the network adoption? Are people joining the network? Are people building on top of it? That's all that matters, because price will follow. So trying to figure out, where the price is going to be at any one point in time. And I wrote a tweet thread about this. It's like, there are no gurus. Nobody knows. Everyone's just trying to figure it out best we can based on the experience that we have. And the market will go where it goes. But the hypothesis, that's the thing you need to test. And the hypothesis is not, does Bitcoin go down to 40K? Does it go up to, does it end the year here? It's not that. The hypothesis is, if we're right, this whole Web3 revolution means there is a mass adoption of this space. Is that happening? And by all accounts, all we're seeing is continued adoption.